Welcome. Good morning. Happy Friday. This is our independent living skills group session or group discussions, I like to call them now. For those who have not met me, my name is Catherine. I am a white female. I have black shoulder length hair that I'm wearing down today. And I have on my Eagles green top. So I'll let you guys know I'm supporting this Sunday. I would like to welcome George. Thank you for coming back. This is our third installment with the Dobbs or Department of Banking and Securities.
Yes.
Today we're going to be talking about banking in the 21st century. So before we jump into that, just quick logistics. We are going to record today's session so we can make the PowerPoint slides available to those who cannot participate today. And those slides and the links for documents will be on our YouTube channel, and I will email those out as well. We invite you to turn on your cameras if you feel comfortable. Captions are available through Zoom. And chat is open for posting questions or comments. And I will read those out as we go throughout the morning. Quick biography for George. He is the Consumer Outreach Specialist with the Investor Education and Consumer Outreach Office of the Pennsylvania Department of Banking and Securities. George has over 25 years of speaking and training experience. He is very passionate about saving and investing for the future and teaching people how to protect their assets. For the last 15 years, George has worked for the Commonwealth of Pennsylvania. Prior to working for the PA Department of Banking and Securities, he worked for the Pennsylvania Department of Labor and Industry, leading a team at the Bureau of Workforce, Partnership Operations and Employment Services. George is, he works with both employers and consumers one-on-one, as well as presenting at several local and regional events. George's educational background includes a master's degree in business administration from Rosemont College in Rosemont, PA. He also holds a bachelor's degree in education from Kutztown University of Pennsylvania in Kutztown. So with that, I will turn it over to George and welcome you all again and thank you for being here with us.
Great. Thank you, Catherine. And just to piggyback onto what Catherine said earlier, fly, Eagles, fly, right? And if they lose this weekend, they were robbed, obviously. So with that, we'll start our presentation. Welcome to my presentation on banking. We actually changed the title to banking in the 21st century. We did some revamping of all of our presentations, upgrading, if you will. And so we changed the title from banking basics to banking in the 21st century. But Catherine, as I joked with somebody earlier this week, the good news is we won't have to change this name again for about 77 years. So it should be. Again, as Catherine said, my name is George Dillman, and I'm the Consumer Outreach Specialist with our agency, with Pennsylvania Department of Banking and Securities. This is what we're going to cover today: the differences between online banking and virtual institutions, pros and cons and considerations for virtual banking, things to remember no matter what type of institution you choose to work with. A little history before we jump into, about banking. And when I say banking, I'm talking about all financial institutions, banking, credit unions, savings banks. I have to cover myself that way, so to speak. But banking has been around for almost as long as civilization has been around in some way, shape, or form. Maybe the start of more formal banks started back in the, ancient Rome, ancient Greece, where of course, with the Greeks and the Romans worshipped multiple gods, and they had temples built for these gods around their cities. These temples were well staffed, well protected with guards, and it was a natural place not only for the priests to keep the wealth that they accumulated, but also wealthy landowners, wealthy citizens of those cities could keep their wealth as well. Sub-basements where everything was kept. And, fees, there was something given, as far as the courtesy of holding their wealth for them. And at some point, they even started loaning some of this wealth out to other people who needed a loan, paying it back with some form of interest. So kind of the start of and of course what we have today, moving forward to where we're at today with banking. So we're looking at banking. We're looking at online versus virtual. I mean, we still have brick and mortar, but we see, Catherine and I were talking about this before, some of the major banks out there going more and more online. They still have brick and mortar locations. Those brick and mortar locations may be changing. They may be eliminating a number of them, or not making as many service, because they themselves are going more and more online. So we're looking at online banking, which a lot of people now are moving to. And essentially, we're looking at them as extensions of these brick and mortar banks. They're conducting banking transactions online or through institutions, mobile applications, or through their website. There's a connection to a physical location of the institution. Again, they're offshoots of the traditional brick and mortar bank. I belong to a bank I've been with for a number of years, a large regional bank, and I see them doing more and more online. And because of that, I'm doing more and more online. If you need to, you can go into a branch and speak with a person. And maybe one of the selling points, at least for somebody like me who still likes to have that physical branch to go into, with everything that I'm doing online, I may go into my local branch maybe once, 2 or 3 times a year. But it's nice to know that branch is there. It's almost like my security blanket. I can go in anytime I want, speak to somebody. I can work with my financial professional there. We'll talk more about that as we go along. So you still have that connection. So online, or another name for online banking with the traditional brick and mortar banks, is digital banking, versus the virtual institutions, or the neo banks, which are basically all online. The institution is strictly on a virtual platform. Transactions are online or through an application. There is no physical location. If you require assistance, any conversations are by telephone, chat, or even through social media. So these are your virtual banks, your neobanks, strictly online. No brick and mortar buildings, although there are pros and cons to a virtual bank, and we're going to look at them now. Pros and cons. The pros to the virtual or neo banks, they may offer low or lower monthly fees on services, may not have overdraft fees, and may offer higher interest rates on savings. One of the advantages, again, one of the advantages to virtual banks is they don't have any brick and mortar locations, meaning they don't have any leases to pay. They don't have electric bills to pay, salaries to pay for employees that need to staff their locations. They're virtual. They don't have this expense, so they can offer lower fees, better rates of interest. The cons: no physical branches, less access to live help, cash may be hard to deposit, may offer less one-stop options. Some, or maybe a lot of these virtual banks virtually offer maybe just a savings alternative to the traditional bank, and not much of anything else, although I think that's starting to get a little better with them. However, some people maybe take advantage of both. Several people that I've talked to, I'm considering it myself, will have a presence with a digital bank, again, with a traditional brick and mortar bank digitally, and maybe a virtual bank for maybe a savings, because they can, in a lot of cases, offer higher rates of interest. They might put a chunk of their savings into that virtual account and collect higher rates of interest on their savings. And if they need the money for anything, it's very easy to transfer back and forth back to that digital bank to use it to cover whatever needs to be covered, an emergency, covering a bill, that type of thing. So standard institutional services, most online institutions offer those standard features you would expect from a traditional institution, such as access to ATM machines and a number of different networks that are, and we're not going to go over all of them. Accessibility, you can access your accounts and services using the internet or on your mobile device. Security, online institutions with regular security measures are considered as safe as brick and mortar institutions. And I emailed several articles to Catherine, and one of them talks about the security of online investing with what I'll call your big box investment companies. We're now seeing a graying of those areas as well, where you're seeing big box investment companies offering everything from A to Z as far as what they can offer, everything from basic banking to investing in individual stocks and everything in between. We're seeing that also with our financial institutions. Again, to use my large regional bank as an example, they have the investing arm, if you will, the savings arm, the investing arm, all under the same umbrella, but two different branches. And the whole idea is to offer a one-stop shop for their customers. I can go into my local branch, and I can do some work, with my checking, savings, but I can also sit down with my financial professional and talk about the investments that I have through them, all in the same branch location. So essentially offering a one-stop shop, not only the savings aspect, but the investing aspects. The one thing we have to remember, though, is, and something and we'll be talking more about that as far as your accounts being insured, at least at most financial institutions, not all. But at most financial institutions, our money is insured up to $250,000. Our savings are insured up to $250,000. If we're involved in investing, that money, as it's always been, is not insured. It's not protected. You're essentially taking a risk when it comes to investing, even if it's through the same institution. Again, my large regional bank, I sat down with a financial professional, and 3 or 4 times she reiterated, George, just so you know, the money that you're putting over here with us is not insured. Even though I said, and I kept telling her, I know, I talk about this all the time. I understand, but but it's good that she was emphasizing and making sure that I know that even though it's under the same name, it's 2 different divisions. Money is insured on the savings side. In most cases, we'll talk more about that, not insured on the investing side. But so we're kind of adding that would be an add-on to what we traditionally, and together they're all lumped into checking, savings, money market, holiday/vacation club, certificates of deposits when we're looking at the savings. Opening a new account, what are your needs? What is best for me? I know one thing, one of the reasons why I'm still with my and I mentioned this earlier, one of the reasons I'm still with my large regional bank is because I have a local branch right down the road from where I live that I can go into anytime I want. Even though I only go in maybe 2 or 3 times a year, I know I can go in there anytime I want to do it. I like having that. I like having that brick and mortar branch, and I might not be doing as much online as some other people. And it's not an age thing. In some cases, people older than me that are doing more online, doing a lot more online than I'm doing now. And I'm slowly, people like me are getting there. We're getting there. So but what are your needs? Do I need to have my financial institution? I also like the fact that I have their ATM machine right there that I can go use anytime I want, right down the road, anytime I need cash, which gets less and less and less. But anytime I need cash, the ATM machine is there. I'm not getting charged that fee, and so on and so forth. So what are your needs when it comes to an institution? financial institution as far as maybe, starting an account or changing. Maybe I'm looking to change financial institution. And somebody like me, maybe the reason for changing is my bank decides to close that branch location, and the nearest one may be miles away. And maybe I'm looking for something that's closer, convenient, still has that branch location close to where I'm at. Fees and features are also something to consider. Different institutions are going to charge different fees. They might charge more fees, they might charge less, higher fees, lower fees. Sometimes it might not hurt to shop around just to get the best bang for your buck, so to speak. What are the identification requirements for opening accounts? And what about all those disclosures? Financial institutions need to require they all have available disclosures, whether it's for customers or potential customers. They should all have a copy of their disclosures at one of their branch locations. Doesn't hurt to go into your local institution and get a copy of that. Or if you're looking to switch, maybe shop around. And that's one way you can shop around, is by picking up, several disclosures from several institutions, compare apples to apples, oranges to oranges, to see what might be the best deal for you, or, for me, for you. Disclosures basically tell you how a bank operates, what they do, how they do it. Like fund availability, which is what we're going to be talking more about shortly. But maybe my institution, I deposit a check and I want to have access to that money right away. I need to pay some bills with that. And I find out that the funds that I just deposited, that check that I just deposited, isn't going to be available. They're not going to be available for up to 5 business days or 5 business days. That should be spelled out in the disclosure, as well as other things about how that institution operates. And so that could be important to me, especially for those of us that are essentially living paycheck to paycheck. That I need to have access to that money right away. Is that something that could, may determine whether I stay with ABC Bank or go with XYZ Bank? XYZ Bank is going to allow me access to maybe half my funds immediately, and then the other half in a couple business days. Hey, that might be a better. So maybe that's a reason to make a move. But this should all be disclosed in those disclosures. Basically, tell you how they operate, what they do, fees that they charge, everything about that institution. Again, recommended. We'll get complaints. We have an in-house staff, and I'm going to uncover that at some point too. We regulate those industries in the Commonwealth. Banking, savings, investing, finances. And we have an in-house staff that will take phone calls. We're constantly getting, not constantly, but we're getting, all the time, we're getting calls, people complaining about their local branch, their local bank. And 90, from what I'm told, 96 of, I want to complain, I want you to do something about them. So we look into it. And from what I was told, 96% of those complaints about banks and bank branches are ruled in the bank's favor. Why? Because it's part of their policy, and it's in their disclosure. This is how we operate. So we need to read those. And if we're not happy, or gee, I'm not happy that my bank won't allow me access to my funds, until 5 business days. Well, then you look around for another, something that fits your needs a little more, kind of bringing it back to what are my needs. Questions to ask your institution. Again, we talked about fund availability. Could be important, especially for those of us, a lot of people out there, and I'm not just talking about people making $10 an hour. There are people out there making 6 figures a year that are living paycheck to paycheck. And it may be important as to when those funds are available that I could use to cover expenses. So fund availability. Are deposits insured? Again, I believe most institutions, your deposits are insured, but not all of them. Do I know if my institution is insured? Might be worth looking into. What fees might I be charged by then. And again, they can and do differ from institution to institution. So that could be something to consider when looking. Ask your institution how they process transactions, largest to smallest, or in order of receipt. And again, this can be important for people living paycheck to paycheck. By the way, one thing, and I do other presentation, I do a presentation on, and I think we're going to be covering that at some point, right, Catherine? Some point on spending plans, or AKA budgeting. And the one thing that I reiterate all the time is that how a lot, how, again, a lot of us have everything that's coming in is going out. The whole idea is to make sure we need to work on a budgeting plan to make sure that we have more money coming in than what's going out. And by doing that, it can solve some of these problems that we can have with our institution. Because if I have more money coming in than what's going out, I don't have to worry about, how my bills, how my transactions get processed. So how they process transaction, largest to smallest, or in order of receipt. Here's the example I use. Say I have 5 bills that need to be paid. The first 4, I have $400 in my checking account. And I still do the old-fashioned check. And for those bills are for $100 each. The last bill is for $400 total. I decide to take care of those first 4 bills first, knowing that I have the funds in there to cover them. And then I write out a check for that last bill, knowing that it's not going to get covered. I'm going to get hit an overdraft fee. We'll be talking about overdraft fees shortly, knowing I'm going to get a hit for an overdraft fee. But what I don't know, then I pay that final bill, thinking that they're going to get processed in order. What I don't know with my particular financial institution is they're going to process largest to smallest. So even though those first 4 may come in first, that 5th one comes in, it's the highest amount. That one gets processed first. And guess what? There's 4 bills I don't have covered now. And I get whacked 4 times. Overdraft fees for those 4 that didn't get covered. So that can be important, again, especially for those of us living paycheck to paycheck. What overdraft options they offer, because again, in that situation, maybe I'm looking at getting covered for those overdrafts that may happen from time to time. And what are the fees for an overdraft? I've heard fees of anywhere from like $20 to $45, and that might just be from a financial institution. That might not cover the charge you might get from the person that you're sending that money to, and they may charge it because using the term with the old-fashioned check, the check bounces. So that's something to consider. What is an overdraft? An overdraft happens when more money comes out of your account than is available. Overdrafts can be expensive. They can be a charge for each item. So again, those 4 bills in that example I used, each one, none of them got covered. Each one could get whacked $20 to $45 each on top of what I get charged from the person I sent it to. And they can charge fees until you make a deposit, until you have money in there to cover it. A little bit about and check the financial disclosures. It's all spelled out in there in what they do. But with a little bit with the overdraft fees, and again, I sent Catherine an article on overdraft fees. Some institutions are starting to lower those fees and even do away with those overdraft fees, and maybe in part because again, maybe not a lot of people are sometimes these things are getting processed right away, and people going online, maybe the advantage to going online and paying bills online, as you can see, a real life, hey, here's what I have left here, what do I need to do? Oh, I got money in my savings, I can transfer that to the checking account to cut, so because of this new electronic world, online electronic world, a lot of people are moving to it. Maybe not as bad with the overdrafts, but also institutions now are starting to lower those fees or even eliminate those overdraft fees. Of course, what I heard is they're replacing those overdraft fees with other fees. They take it from here, put it over there. So avoiding overdrafts. Know your balances, right? Which again, for doing online bank, we can check our balances online. It should be easier to do. Sign up for text or email notices. Check that deposits have cleared, right? Fund availability, are those funds now available to use? And review statements and balance accounts. Overdraft protection, what does opt-in mean versus opting out? At one time, and I think it was in the early 2010, 2013, my apologies, I'm forgetting the exact date, although it doesn't matter, really, that at one point, not that long ago, financial institutions were allowed to opt us automatically. We signed up. We became a member of their bank. We opened accounts. They would automatically opt us into an overdraft protection, with our accounts, or checking accounts, with our accounts. In many cases, they wouldn't even tell us they were doing it. In fact, they didn't have to tell us they were doing it. There was just an automatic thing. We'd have to see it, we'd have to ask about it, but it was like an automatic thing. Of course, what comes with overdraft protection is a fee for that overdraft protection. And one of the reasons why they automatically opted everyone into it. Well, again, sometime in the early, either 2000, somewhere between 2010, 2013, the government changed that. Financial institutions were no longer allowed to automatically opt you into overdraft protection. You had to decide to opt in. Now, what I found out personally is they'll probably do what they can to get you to opt into overdraft protection. I opened a new account with my large regional bank, and the person that I was working with 3 or 4 times tried selling me on this idea about getting overdraft protection and protecting myself in case and at first I said, wow, okay, what is that included? Is that free? Oh no, there's a fee. Oh yeah, that's okay, I don't need it. And even it said to him, I said, again, 3 or 4 times he tried selling me on this. And I'm assuming that they're all doing this. They're all instructed to try, whether you're an existing customer like me opening a new account, or you're a new customer, period, doing what they can to sell you on this overdraft protection, which again, for some people living paycheck to paycheck, what's coming in is going out, may be a good thing to have that. But for somebody like me, who's making sure that he has more coming into his accounts, what's going on, I don't need that. And I told him that 3 or 4 times. So, now we have to opt in, although they might try to hard sell you on opting into the overdraft protection. What does it do? If I do I do have an overdraft, maybe it connects me to my other accounts. They can move money from another account into my checking account to cover that overdraft, or they issue me a line of credit. And especially if this is like a once in a blue moon thing, I'm generally a good customer, and I have plenty of account. Maybe it happens once, and they do have an overdraft fee. I think many times, especially if they know they have a good customer, they want to keep that customer, they could issue a refund on that overdraft fee if we do have one, and if we don't have the overdraft protection. All right, if you made mistakes, fees for overdrafts, as we talked about, from the bank and even the entity that you're paying that money to, reported to a check verification service. And if it happens often enough, your account can get closed. In a sense, you could get blackballed from opening accounts, or having an account in your existing institution, or opening accounts because of this. It gets reported to check systems, which is like the overseer, the gatekeeper to this. And you may need to reach out to them, first of all, see why you got blackballed, so to speak, and if there's anything that you can do about it. And this is their toll-free number. You can contact them online at consumerdebt.com or 800-428-9623, and you can get a copy of your report, consumer report, once a year from them, just to see how everything is. Or, like I said, if you have been blackballed, to see why. phone them, reach out to them online, but you can touch base. Now, for those people that do that, I messed up. I overdrafted too much of it. There have too many issues with my institution. They close my account. I get blackballed. Fortunately, there are financial institutions that do offer what they call second chance accounts. It's a type of a savings account, limits on the number of transactions that you can do. Limited use. They may only allow like some type of a debit card with debit card transactions. However, it does allow you to have some type of an account. Now, the good thing is you do as you need to be doing. You're making sure you're not overdrafting. You have enough funds in there, so you do what you need to be doing. And in a short period of time, it's for a defined amount of time. In a short period of time, you can graduate back to regular accounts again, savings, checkings accounts. Now, to go through this, to get a second chance account, it may require you to take some type of financial literacy class, like a budgeting class, but may be a good thing for some people. Force them to start working on a budget and making sure that we have more coming in than what's going out. All right, how is your money protected? FDIC or NCUA insured? FDIC with banks and savings banks, Federal Deposit Insurance Corporation, and with the credit unions, it's the National Credit Union Administration. You are insured up to $250,000 per depositor per institution. Let me explain that and why I emphasize that. If Catherine and her husband, I'm sure that you have probably well over $250,000 in your financial institution. And if you want to, you can go down to like me, I'm the same way. I could, $250,000 in ABC Bank, I can walk down the street to XYZ Credit Union and open accounts, and I can get insured for another $250 at that financial institution. So per institution and per depositor. So husband and wife, say they have a joint account. They're both insured up to $250,000 or $500,000 total. Now, as I say all the time, I personally wouldn't worry about somebody who's being smart with their money. Probably wouldn't even have anywhere near $250,000 in their financial institution. If they had even close to that, probably a good chunk of that would be in some investment someplace, earning some real money, so to speak. But we are insured. Again, for those institutions that do insure, some don't. Could be good to check. We are insured up to $250,000 per depositor per institution. FDIC or NCUA, easy for me to say, FDIC or NCUA insurance only covers deposit accounts. We talked about that earlier, right? We're talking about the savings aspect. If our large regional bank or even our credit union offers a financial investing arm, only the money that's in the savings arm, checking accounts, savings accounts, certificate of deposits, money market accounts are insured up to $250,000. Not what we have in the investment arm. That money is not insured, even if it's with the same institution, because again, different branch, different division, if you will. If you have funds in anything other than deposit accounts, they may not be insured. Again, we're talking about investing. Many institutions, virtual or traditional, have investment arms that may offer wealth building or brokerage accounts. We're going to talk about the investing aspect because, again, many of them are starting to do that. As just real quick, the big box investment companies, as I mentioned, some of them, or a lot of them, are starting savings divisions, if you will, with their institutions. And it's all about offering everything from soup to nuts, whether it's a financial institution or big box investment company. I went on to the top 4, 5, 6, the ones that we see all the time, seen advertised, and they all now have that basic banking aspect to them. Same thing with a number of the banks and credit unions that I looked at with the investing arm. And it may be good, at least for some of us, to save and invest. Even in retirement, I might be looking at investing some money. There's a line that I use on a regular basis with this, savings and investing. Why we want to save and invest when we have those additional funds. We save to keep pace with inflation. We invest to stay ahead of inflation. That's how we get ahead. That's how we get, because the rates of return are so much better. Of course, again, we're taking some kind of risk when we're doing that because that money is not insured. Although in this day and age, I think they're making it easier and easier for us to not, have to be insecure about our investments. They should be fairly, but it's not insured, so not secure. So many institutions, virtual or traditional, have investment arms and may offer wealth building or brokerage accounts. Be sure you understand the type of account you're opening. Are you saving or are you investing? And if it's a good institution, like I feel the one that I belong to, they will make sure to point that out to you. Again, my financial professional pointed that out to me 3 or 4 times as I kept telling her, I know, I talk about this all the time. I know. Before you open a brokerage account, investigate, verify the firm is licensed. Understand the investments that are offered, review the relationship summary, ask questions of your professional. Not sure if we have to worry too much about this with the tried and true, what I'll refer to now as the big box financial institutions. I think we should feel pretty secure with them. It's the other financial professionals out there, the ones that could possibly be scammers. And we need to do a little investigation into before we do anything with them. Choosing the professional, look online, ask friends or family, verify their license, ask questions, review the form CRS. And I have a little note on the form CRS here, a little bit too much to memorize, but CRS, which is Client Relationship Summary. This is a 1-page document mandated by FINRA, the Financial Industry Regulatory Authority. It covers all the information a client needs to know about their financial professional in plain English, so we don't get any of that legalese. In plain English, in an outline format. So they should make those available. One thing I don't think is covered here, but something that came up last night in a presentation I did, make sure they're a fiduciary. A fiduciary is someone that says that has to look out for the customer's interest, not their own interest. I'm not having you invest in over here because it's going to get me, pay me higher fees. I'm going to have you invest over here because that's what's best for you. Make sure that person is a fiduciary. Professionals assisting you. How long has your firm been in business? How do you and your firm get paid? Different financial professionals, different companies get paid different ways. I might pay for every time I go in and have a meeting with them. Maybe I get paid I pay a monthly fee. Maybe I pay fees on every transaction that takes place. How do they get paid? Are all investments registered properly? Which can be important. What types of products do you offer clients, and what fees can I expect to pay? Let me go back to number 3. I've been thinking about that. Let me go back to number 3 real quick. Are all investments registered properly? There was a gentleman who is working in the Philadelphia area who our agency investigated. This is what we do. We regulate these industries. We investigated this person and found out that some, not all, but some of the securities, aka the investments that he was working with, were very iffy, and we issued a cease and desist on those securities. So, are all of their investments. We talked about number 4. More questions to ask. What training or experience do you have? Tell me about your other clients. What is your background? What fees will I have to pay? This is a site you can go through. This is overseen by FINRA. It's called Broker Check. brokercheck.finra.org. And we can look up and research financial professionals. Maybe we're looking for somebody local. We can look up local financial professionals, make sure that that person is registered, licensed, basically licensed and legit. Find out, do they have any complaints against them? How long have they been doing this? And so on and so forth. A lot of information we can find. By the way, if we can't find them on Broker Check, maybe there's a chance they're not registered, which means they may be doing this illegally, or they could be registered on the SEC's website, sec.gov. So another source to check someone out. Again, here's the web address, www.brokercheck.finra.org. Now, if you have a complaint, coming into the home stretch now, our agency, again, regulates those industries in the Commonwealth. If anyone ever has a question, a problem, an issue, a complaint, as it relates to banking, as a whole, banking, meaning banks, credit unions, savings banks, investing, financial services, they can reach out to us. For example, say I'm having an issue with my local bank that's not getting resolved, and I need to get that issue resolved. Reach out to us. We'll take care of that. I mentioned how 96% about complaints that come in about financial institutions are ruled in that financial institution's favor. And a lot of it has to do with people not reviewing their disclosures to see how they operate, what they do, and so on and so forth, which they're allowed to do. But there's still that 4 to 5% that aren't ruled in that institution's favor. So if they're doing something they shouldn't be doing, we need to know about this. And that's where people can help us to help them. So we need to know about this so that we can do an investigation and make a correction. Maybe in some cases they don't realize they're doing something they're not supposed to be doing. So yeah, complaint. Maybe there's somebody down the street or in the next town that has this great investment opportunity you just can't miss. And I think it's just a scam and I want to report this person. You can reach out to us and report it. Maybe I had my identity stolen. I don't know what to do. Reach out to us. We'll point you in the right direction. Again, our toll-free number is 800-PA-BANKS or 800-722-2657. We have an in-house staff that will take phone calls Monday through Friday from 8 to 5, normal business hours. You call during those days and times, you should get a live voice answering the phone. If you don't get a live voice answering the phone, you leave a message and somebody should get back to you within 24 business hours. The call and our services are free. And if you reach out to us and it's not ours, it's meant for somebody else, we will make sure to point you in the right direction as far as who you need to reach out to. So there is no wrong door, so to speak. Common complaints that we get, again, things about deposits, fund availability, that could be a biggie. As I said, they're allowed, I guess they're allowed to hold funds as long as they need before they can release them to be used. And if we're not happy, we can always change. We can always find an institution that will maybe be a little bit better with the fund availability. Account fees, same things. They have their fees. They disclose them. Hey, here they are. We're not hiding these. Here they are. Once again, and maybe I check disclose, and I check several disclosures. I shop around for a better deal, so to speak, for lack of a better word. Unauthorized debit or credit transactions, which could be a security thing that needs to be taken care of. Of course, it's reaching out to your financial institution to take care of that. Victim of scam or ID theft, again, biggie. And we don't directly take care of it, but you reach out to us. I'm referring really to identity theft. You reach out to us and I had my identity stolen. I don't know what to do. We'll point you in the right direction as who do you need to reach out to resolve this. Unlicensed lending, AKA loan sharking, which we need to know about, we need to investigate. All right, we regulate not all banks, credit unions, and savings banks in the Commonwealth, but over 200 state chartered banks, credit unions, savings account in the Commonwealth. Those that are federally regulated, with the banks, credit unions, with banks and savings banks, you can reach out to 800-613-6743 or www.helpwithmybank.gov. For credit unions, you can reach out to 800-755-7030 or www.ncua.gov. Other federal resources, Consumer Financial and Protection Bureau, a lot of good information on their website for consumers as it relates to issues such as what we talked about today. www.consumerfinance.gov or 1-855-411-2372. Federal Deposit Insurance Corporation, or FDIC, at fdic.gov or 877-275-3342, and the Federal Reserve Bank at Federal Reserve consumerhelp.gov or 888-651-1920. Investor resources. You can reach out to the Securities and Exchange Commission. Again, a lot of good information on all these sites to check out. And that's why we're including them. www.investor.gov for the Securities and Exchange Commission, 800-732-0330. The North American Securities Administrators Association, or NASA. That's NASA with one extra A, not the rocket people. www.nasa.org/investor-education. And FINRA's broker check. Very important if I'm looking for a financial professional, could be very helpful in locating somebody. Or checking somebody out that I'm already working with. www.brokercheck.finra.org at 800 or 800-289-9999. With that, we will, I guess we will stop the